Hello everyone, welcome to the Ichimoku daily analysis for gold for Thursday, April the 1st, 2010. Well, a fairly significant last 2 days today, and even more so today, where we have two fairly bullish candles in a new first time frame uptrend. The previous day we had a candle with a higher high and a higher low, and that's continued today, a market with a higher high and a higher low. What's quite significant is the large size of the body of these candles and green bodies, and that's telling us that the buyers have made some very solid net bullish progress on both of these days, and they've even extended the strength of that net bullishness that they've had today, with the body of the current candle being slightly larger than the body of the previous. Now, this market has closed up towards the high, and that tells us that the buyers have closed in control, and they've shown some fairly strong commitment to taking this market higher. They did lose some commitment probably later in the day, and we can see that we have this small shadow on the top of the current candle, but that's not terribly significant for this market. Now, interestingly though, we've had this bullish breakout up above the cloud of the Kumo, and that's very, very important for this market. That is a bullish signal in Ichimoku candlestick terms, and it's really tells us that the probability is that the market will continue to the upside in this first time frame uptrend that the market's in. The only thing that may limit this will be the resistance offered from these swing highs, where we saw previous downside price rejection, and the market is interacting with one of these regions at the moment, and that region extends up to around the 1130 region, so that's very important for this market. If it can trade up above there, certainly this region extends to about 1132.33 and then up to around the 1145 region. So even though we have broken out up above the cloud, then there is potential for this market to hold up at these resistance areas. But overall, in big picture terms, the market is bullish because we've had that breakout up above the cloud. So we've gone from the market being neutral to the market being bullish. So that is a very good sign for people who are wanting to go long this market. Now, the market is also trading up above the Tenkan Sen and the Kijun Sen, and that tells us the market has a positive bias in the short term and medium term time frames. And the market just broke out and closed solidly up above both of those today, certainly the Kijun Sen. So that is significant, and that is another bullish signal with the Ichimoku charts. We haven't had the crossover of the Kijun Sen and Tenkan Sen yet. The Kijun Sen is still up above the Tenkan Sen, and that is not a bullish signal. So that's one factor that is just telling us maybe to be careful at the moment. But that crossover does tend to lag a lot of the other signals that we see with the Ichimoku charts. Just looking at the Chiku span here, the Chiku span is simply the closing price projected backwards 26 periods ago, and we compare it to the candle directly above or below. So this Chiku span is above that candle there from 26 periods ago, which means that the current close is above the close of 26 periods ago, and that adds weight to the bullish signals that we've got with the breakout up above the cloud and the breakout up above the Tenkan Sen. That tends to give us probably more confidence in the signal that we get from these breakouts. So to the upside, we have a bullish market, and we need to consider that bullishness will continue to the upside. Some areas of potential resistance around the 1130 and then up to around 1140. To the downside, then we have a very thin amount of cloud offering support, and then certainly a very strong large area of support down below. So we need to watch how the market reacts down or up around this 1130 region.